This is Tony Moeller, Matt Aarons with MN Wealth Advisors, and we want to touch base. Matt, we've gotten some calls talking about, hey, the market did really well, and we're starting to see a retracement recently. What's going on?
Well, the name of the game is inflation, again, just like it was in 2023. You think about how we ended 2023. You and I had conversations privately that I had secretly kind of thought that a lot of performance we were going to get in 2024 kind of got shoved into the back end of 2023. We had a good inflation print, October, November of 23, and then we just rocketed off the bottom from that point. Here in 2024, the market at first was expecting 6 rate cuts, which we never thought was going to happen, but inflation is proving to be pretty sticky. So the Fed's trying to figure out what are they going to do, and you've got, energy was kind of the key reason why we had a surprise to the upside in April. It had been a net positive to us, bringing inflation down. And in April, which was March's numbers, it actually went the other direction. So definitely going to keep an eye on those inflation numbers, energy specifically, but inflation is the reason why we had a negative 4% in the S&P 500 for April.
Well, they talk about the Fed's back in the corner. Like you said, we were expecting a lot of cuts. They may have had one cut this year. It could be very much later than they thought. So when we say that, and I agree, if you would have looked at a lot of the client accounts, the returns really happened in November, December of last year. They spilled over this year. Then we came down in April. I mean, it's normal to have a 10% correction in any year. That's just the norm for the market. So when we say that, in the near term, and what would you say for someone looking for now through the end of the year? Volatility?
I do still think we're going to have some volatility through the rest of the year. It's, as you mentioned, it's very normal for us to have a pullback, definitely within that 0 to 10% range. And there were some key themes there that we were kind of getting out ahead of our skis. You look at the Magnificent Seven, which last year was kind of one of the storylines for 2023. Several of those companies have pulled back already this year. AI is one of those fun to invest in stories, but it's hard to kind of come to fruition and see how is that going to be productive for the economy, or just harder to implement, I think. And then you've got open models versus closed models, and how do you make money off of it, and all this kind of stuff. And so I think it's kind of going back to a little bit of the fundamentals, and we're talking now about companies that have good cash flow, who are not relying on debt specifically, where they're going to have much more of an emphasis on interest rates, not a much less sensitivity to interest rates. I think those companies will continue to do well. But there's some sectors that they are highly leveraged and use a lot of debt, and they're gonna struggle. So we're going to be probably fairly flat through the rest of the year, but you're going to definitely see winners and losers through the rest of the year.
Well, the one comment I have real quickly, it's an election year. Overall, that should not affect anyone's decisions, and normally the market's up in election year, so I think that should really be taken off the table.
Yeah, and now it's just about watching the numbers. May 15th is a big number for us. We're going to get inflation numbers on May 15th for April. That'll be a key number for us, and we'll see how the market reacts to that.
Okay, appreciate it.